a horse to lead us.
Oh, that's so nice. Look, I
You're
miss
a
you guys.
poet.
I missed you guys, and I tell you what, Steve and I brought up how much anxiety I felt not having a screen for 4 days. It was like a withdrawal from something. So anyway, I'm glad to be back and back online and be able to hear everyone, hear the team. Thank you, everyone, for your well wishes. Yes, I'm alive, and thank you that you missed me, and great to be back. And I'd say that with what happened yesterday, what I heard after the close on CNBC was, they have that big hedge fund conference, and they interviewed this lady, and she goes, "I'm so relieved." And you know what I thought when I heard that, that everyone thinks, this is it. Now, I just pulled up my chart, and I had this line before. So, I don't know if it's going to be the low. I think that we could rally,
But by the way, Dale, are you showing a chart now? We can see the other, just the Zoom screen.
Oh, really? Resume. Yeah, is there the chart? You see the NASDAQ?
There you go.
There you go.
I'm still a little bit out of sorts, and I have to fix a few things up. But yeah, there's a line in NASDAQ, and I would say that, your level, Stell, the 4,500 close, maybe we rally back there if the Fed pulls in their rhetoric a little bit. Also, something I talked about, and I hope you took the trade, 32,000 in Bitcoin, right, Stell? So, I mean, it got pretty close, 33.8. This was the first to turn yesterday.
Yep.
Yeah.
I didn't take a long. I did have a short pattern in play from the break below 40K, which went well, but I didn't. Nice. I didn't quite take a long because we didn't quite reach 32K. But yeah, you're right.
Great scalp.
It was the first to turn.
And people are asking, what's going to happen if Putin goes in, and all I could say is, if he goes in, it's really a threat to Europe. But we have an ocean here. So I can't see people running to the euro on any kind of geo risk. And now it looks like it took a huge liquidation break in equities and risk off, but it looks like perhaps we're finally going to, break to new lows, and maybe the dollar's going to get that last push up. So, that's what I think. I still think there's one more high left in the dollar. So, I don't know why that's happening, but that's the way that looks to me in the dollar. And EG came to life a little bit yesterday with risk off. Oh gosh. Anyway, maybe someone could take over the screen. I'm still having a little difficulties here. I don't know why, but this thing. Now let's try this. Oh,
all right, I'm here. Go, Dale. Welcome back. Holy cow! What's going on over there? You lost your way just over a few days.
Yeah, it doesn't take much. Well, some of the new things went in are kind of a new program. Here's Euro Pound. So, yeah, I'm just getting used to things again with some new stuff on here. So it'll probably take me a couple days, but I hope everyone is okay. That's the main thing. If you're listening to ForexAnalytix, there were no bulls saying buy dips here on our team.
Yeah, so, the thing is we so let's talk a little bit about yesterday and about the panic that hit the market. If you were looking at the at equities, we had the fear gauge actually ripped higher, the VIX, right? So yeah, I mean you look at the VIX, and the VIX was ripping higher yesterday, and that that allowed for a massive sell-off via equities, and you saw the S&P drop to the breakout point right here, 161% extension of the last move to new highs.
Okay.
You know, we were testing some pretty key levels. You didn't even have to be part of the ForexAnalytix family to really see, you know, the pattern in play that was put up yesterday here when we dropped to the 161% extension. We're already out of that pattern in play because it, you know, hit the support and bounce. But man, that extreme fear allowed for a
Nice
you know,
scalp.
yeah, I mean, it's a lot of opportunity ahead of the jobs report. And I know, like myself, I actually ended up I tried to buy the S&P a little early. You know, it's funny, I actually got stopped out because I had to go take my son's equipment back to school because he left it at a friend's house, blah 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 blah. Anyway, so it was one of those I had to run out, but I took advantage of it in several other different ways. And that volatility is just it's something you just don't see that often in the market.
90 years, Blake. I heard a guy on CNBC say it was the biggest intraday decline in 90 years, not percentage drop, but point drop.
Yeah, I mean,
day.
that's a big, I mean, you know,
what was 90 years ago?
Well, per you know, when you say point drop, or it couldn't have been point drop, could have been, or it was
that's the guy said, you know, maybe he was at that hedge fund conference. He said
it makes sense to be a point drop because the higher we go overall, the smaller percentage 100-point drop is.
Yeah, but you know, I was gonna say, you know, from I mean, percentage wise, I could see it percentage wise a pretty big percentage, but I don't know, point wise, it could be pretty big because the reason why is because we're at such high levels currently. But anyway, it was a massive move. Hopefully you guys got to take advantage of some of that volatility that hit the market. It
took cojones to buy it down there, buddy. That was really, you know, gutsy.
You know, the thing you have to be really careful of is being too aggressive. You know, when you have like I'll just give you an example because I trade futures. You know, if you buy one futures contract in this type of environment on the S&P, you can't risk 100 points. I mean, you can, but you know, if like let's say your trade costs 25 grand, or you know, like in my case, you know, for one full S&P, you know, S&P contract, you know, you're talking $16,000. You know, on a 100-point move, you're going to be down $8,000, right? You know, you can't sustain, you know, one futures contract in the S&P, you know. I mean, you can, but that's a big percentage dollar amount loss of your investment. You know what I mean? So, you know, a lot of the Europeans, you know, and a lot of people in the UK, when you guys trade these CFDs or ETNs, it's a lot easier to navigate, you know, through your products than, you know, us in the United States. We're forced. You're either trading, you know, you're trading in a futures contract, or you're going to be trading, you know, through like the SPYs or the you know, diamonds or whatever. So it is these are aggressive moves. When you see moves like that, I mean, they are big, and I mean, that was a huge move. But anyway, a lot of support was hit, but it wasn't just the S&P. It was like, if you take a look at the DAX, and the DAX actually hit really critical support yesterday. I mean, this is like the major support zone. So it didn't really matter what you were looking at. It was just some pretty big, you know, pretty big support levels being touched. Now, the thing that's going to allow for the market to bounce from here is if the Fed, you know, like I think Dale, I think you mentioned it this morning, they have to lay off the rhetoric.
Yeah.
are they going to? That's the question. And, we were talking about this yesterday. I don't know if they are really going to do that. And Stelios, you made a good point yesterday. Why would they do it, after just a 10% decline, right? I mean,
yeah, it's a difficult one because they want to get ahead. They want to hike. They want to have ammunition to cut when the next crisis comes.
Yeah.
So they want to get ahead. And if you zoom out on the S&P, this is a blip. So if you look at it on a weekly basis, yes, we've come down 10%, but really look at this 45-degree angle rally. So theoretically, they really shouldn't change anything with the way they speak, the way they go ahead with the schedule. What I'm worried about is that this is the Fed, and we know how central bankers are sensitive to equity markets. That's my problem.
They definitely are, but I'll tell you, I think if you guys are looking for trades to do like today, we're probably not going to get the volatility that we saw yesterday. I would assume volatility subsides, but really, I think all the trades are going to develop going into tomorrow or tomorrow post FOMC, because it's in my opinion, it's a pretty black and white trade. It's especially if you're dealing with currencies. You've got the dollar index that's set up for a screaming rally, like F.U. everybody rally. The dollar index is, because all we have to hear from the Fed is, they don't change their messaging at all. This dollar is probably going to hit new trend highs. I mean, we're probably going to go up towards 98, right? So that in my opinion is a straight shot, because you got everybody that really is trying to top tick the dollar. So the dollar is going to go higher, and that would mean stocks break through this 4,200 level, and we start seeing a much broader meltdown towards the mid, let's just call it 3,600 level. Now the flip side is, if you guys feel that the Fed is they're a little nauseated at the volatility roller coaster that we're seeing, and they backpedal a little bit because you think the Fed is that fragile, to sentiment and blah 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 blah, then we're going to see the stock market recover and the dollar index probably back down towards the 94, 94.50, maybe 95 level again. And I think that's pretty much it. The market's going to determine tomorrow if the Fed is status quo or if they're backpedaling. I doubt they're going to be more hawkish, but if they are, look the hell out, because the volatility we just saw yesterday, that's nothing, compared to what could come if they decide to be more hawkish. But it's going to be interesting tomorrow, and I think you guys need to save your powder between today and tomorrow. I think it's going to be things are going to get rather volatile. So Ryan, what are your thoughts here?
Yeah, pretty much in agreement with you guys. I think if we take away everything that happened in stocks yesterday and for the last couple of days, that the Fed, in my mind, will be coming out with a message to rein in some of these hike expectations. When you got people like JP Morgan, some analysts at JP Morgan saying there's going to be 8 hikes this year, you need to rein that in. And I think that's going to be the Fed's message, but it's going to be interpreted as, oh, the Fed are coming out, the Fed put is here, they're saving the stock market because the stock market's saying a hissy fit. I think that's the wrong assumption to make, that they would be coming out anyway if stocks are at all-time highs to rein in expectations. But apart from that, I think they're just going to say, this is the path we're on and we're sticking to it. We've got 6 hikes potentially penciled in from members over the next 2 years. That's what we're doing. We're going to look to ease, to do QT faster. We're going to look to do the end of QE, as we've said. We're sticking to the path. This is it. But don't get out your tree about it. Don't get overexcited about it. This is what we're doing. But they obviously, Powell likes to play both sides of the coin. He will highlight if there's any risks that come up in the future. We are prepared to slow QT, slow the pace of hikes, and that'll be the dovish spin that people are looking for. And, they'll use that as the excuse. But as far as markets go, you know, it's difficult when you get a day like yesterday, sort of out the blue. Is it a blow off continuation of what we've seen this year so far, and that's, you know, released all the pressure, or is it a sign of something further to come? We're entering a full on bear market. The easiest way to look at it is you look at the lows. You know, there's a reason why the Dow stopped where it stopped. The reason why the S&P stopped where it stopped. Nasdaq, any market you look at that took a pounding yesterday, there was a reason why it stopped there. That becomes a level. Pure and simple, it becomes a level. If we test those lows again and hold, right, the market is now finding itself in a bit more balance. You've got a bit more conviction to try along and look for another bounce. Today's potentially more dangerous than yesterday because everyone saw what happened yesterday. Everyone's like, well, what's going to happen today? Is it going to happen again? Is it not going to happen again? Is it going to rally? Boom, boom, boom.
Yeah.
So the
chances are it's not going to happen again.
Chances are it's not.
People are going
it's in
to
your
press.
mind. The psychology of trading comes into play in days like this. You know, I'm looking at futures, and futures are well off. You know, how the markets got back to positive territory on the close yesterday is astounding in itself, but it did.
Wasn't it? I was
like, you go to, you know, I went to dinner and the Dow's down 800-900 pips. I come back and it's closed up, and they're all closed up. And you think, what the hell's going on here? You know, in some aspects you can't trade that. You know, it's difficult to trade. But here we are with futures, you know, down deeply in the red again. So, you know, we're not out the woods yet. But, you know,
the only way you can
watch those lows.
The only way you can trade that is really, you know, you can't. Well, with what the hell just happened there? With a small product, you know, just a product with very little, you know, like I guess some of those CFDs are
Dogecoin.
Oh yeah. You definitely reduce your risk down. You reduce your risk down. You take account of volatility, but you also, when you go on your charts, you know, look at the wider levels. Look at the bigger, more longer term levels. Because look at that chart you got there. Look how many levels it's carved through. Fibs, lines, you name it, it's carved through them. So you've got to. It's something I try and teach people when I talk about charting. Is you set your levels up on your chart and then rate them for strength. You know, how strong is this level? And when you look at the levels it's carved through yesterday, then you've got to look at your big levels. And that low you've got there, the dark blue line, what's that, 42.80?
Yep.
You know, yes, that's one of the big levels you look at. Okay, it broke, but, you know, then you think those are the level. You know, I wouldn't look to trade those little fibs in between while there's all that volatility. I would look at something like that 42.80, and maybe I'd lose money on it, but that's where I'll try it, and I wouldn't lose money at the 3 or 4 other spots on the way down.
And you know, the thing Ash said, you could take a micro. You know, a micro. I just pulled them up on my futures account. It's still per contract. It's still 1,600 with $1.25 per tick. So on $1.25 per tick, you know, you're talking about what's that, $5 per move per point. So on the S&P, if you go, like, let's just say 44.35 to 42, what is that? Oh, here, let me just say, 40, what is it? 40, what did I just say? 44, let's just call it 4,400 minus 42, how low do I go? 42.40, 42.30. 42.30. That's 170, 180 S&P point move yesterday. You multiply that by $5, right? That's an $850 move on a $1,600 trade. I mean, you know, go ahead, try to, you know, put up $1,800 and lose half of your money intraday trading the S&P 500, right? I mean, that's that type of volatility that we saw yesterday. You know what I mean? So, you know, for those of you guys that, you know, buy or sell the S&P and you sit in 100 pip, you know, 100 point, 200 point loss or whatever it is, I don't know what you're trading, but it ain't a futures contract. That's for sure. You know what I mean? So you got to be really careful about navigating through that type of volatility with that type of when you're trading, these types of products. So I just need to point that out because that volatility will bite a lot of people, right? So got to be very careful. So let's talk a little bit about currencies. We have currencies like the US dollar, Norwegian krona that have broke higher. We've got the Aussie dollar. Now, I got to ask you, I know you've got a good price, Ryan, on the Aussie. You own it at 70 cents, and you got some great prices here. How do you feel about the Aussie at current levels?
I'll lock it a bit higher, obviously.
Well, right.
But
I mean,
yeah.
but does it make you nervous down here, or are you looking at it going, I actually want to be a buy. I'm going to add to my position down here. What are you guys thinking?
Yeah, I mean, there's a little bit of a line around 71. We held that yesterday. If it gets below 71, that's when I start to get a bit nervous. I did have some opportunity. My average is 72, 54, 56, something like that. I did have opportunities to let a bit off, but I held on. We're still ranging as far as I'm concerned. 70 is a big level. It's going to take a lot to bust that level. The Fed's got to hike, 50 pips tomorrow to even get a move of that magnitude down there. So when I'm trading longer term, I can overlook the noise, the intraday noise sometimes. But yeah, if we get below 71, then it's looking a bit bleak.
You know what I'm gonna say, Ryan, is I hope to hell to God that the Fed just acts. They just come out of the gate just more aggressive, because once it's out, priced in, it's done. Then we could really sell the dollar after that. I don't know, I get you meaning, yeah. But tomorrow's not going to be the day. It's going to be in March, right? I mean, March.
Yeah, they'll tee it up if they're going to do.
Yeah, they're going to tee it up. That's what tomorrow's all about, is teeing it up. But one of the other things is that since you trade the Aussie, you got to look at the Kiwi, and we're at channel support. I'm bearish because the flag pattern has me bearish. It's the trend, and it's obviously I think if it breaks, it's going to 64 cents. If you guys have read the chart of the day, and, I was on the Pepperstone show last week and talked about it breaking down last week, and it has. Problem is we are at channel support, so you got to be a little careful. But if stocks bounce, this is one of those I'm actually keeping a kind of a close eye on, because if let's say risk bounces, let's say the Fed freaks the hell out because they're so worried about asset prices. And we've learned, one of the things that we've learned, guys, I'm sure everybody could chime in here, is we've learned over the last 13 14 years is the Fed they do care. It's like that silent mandate that they have. They do care about what happens with equities.
Yeah.
Right. So, if for some reason the Fed backpedals tomorrow a little bit, we see the Kiwi bounce. I think if it gets back above 70 cents, like maybe like 70-20, 70-30, I might actually start to look as it is a false breakdown and play it back to the upside again. I'm not in that camp yet, because I do have some short New Zealand exposure. If you're in the ForexAnalytix community, you know exactly what I am trading the Kiwi short against right now, but I won't be doing that if we get back above 67 cents. So it's something that I'm paying attention to, even though I'm not trading the Aussie as you are, Ryan. Now, one of the other things I want to talk about that happened yesterday, if you guys didn't figure this one out, okay, let me take a step back for a second. Let me mention this. If you guys have not taken advantage of the New Year's pricing that we do for ForexAnalytix, it actually got extended to January 30th. We had requests from current subscribers and subscribers that are coming on that are like, hey, can you extend that out till the end of the month? And we actually had multiple requests, Stelios, from our support guys. Yep. Max has told us. So we actually extended this offer out till the end of the month, because it's a lot for a lot of people. It's payday. It's when get payments or whatever. So we extend that offer. So you guys take advantage of it. I mean, this is an example of, you guys can see what the chat rooms are, the trades, like you can see like just some of the trades that, I was doing yesterday afternoon, closing out, all of these, positions here, dollar MEX, dollar CAD. And then, we have our general chat room, the macro Forex Flow live chat room, news and research room, Spanish chat room. And then that's on top of like the app and, this is obviously the product itself where you have data flash and live squawk, written feed, our news flow, all the analysis, all the, the analysis inside of the, application itself. And you can actually access live charting if you want to do it through here instead of using, trading view. Anyway, this whole thing is way less than $100 a month with the special pricing. The reason why I bring that up is because we do actually do special webinars actually all day long for ForexAnalytix subscribers exclusively. And yesterday during the morning edge, I said, and this is the morning edge is just for ForexAnalytix subscribers. I'm like, you want to see a turn in the equity markets, you got to watch cryptos first, because cryptos is what's going to stabilize the equity markets. And if you look
great call.
Yeah. Just if you watch it, Dale, let me compare it to
Mike, I watched the market on CNBC yesterday, and
because you were without your okay, so take a look at
Bitcoin. Was
Bitcoin actually stabilized a good hour before the stock market finally found its lows. And once Bitcoin started stabilizing, we hit that 161% extension in the S&P, and then Bitcoin started to rally as we hit a new low. And I'm like, man, that new low is not going to stick in the S&P. And that's when, I was tweeting about it yesterday. So, and that really stabilized things in the S&P and the rest of the markets as well. And the thing you have to, I guess the takeaway here is, and it's not so much, I need to be watching crypto all the time. It's just, you keep it on your screen, because crypto is the ultimate risk asset right now. It is, whether you're talking about, Litecoin or Solana or whatever altcoin you're trading or whatever, that's the riskiest trades you can be doing as an investor, right? Not necessarily as a trader, as an investor. So, if you start to see those stabilize, it, they can help navigate other assets. So anyway, that's something that I think you guys should be, paying attention to. And it's something that always just kind of stays on my radar. Mike says, hey, Blake, Jim said on your show last week that the Fed is different this time. They want to jawbone the markets. Yeah, Jim Welsh is he's pretty. He thinks that the Fed's going to be relatively hawkish. And again, we have to point out why wouldn't they be, right? So that's
wasn't Jim kind of looking for this? I mean,
he was well ahead of the curve. Yeah. And if you guys don't know how to find Jim, this is Mark Chandler's piece. And by the way, I read Mark Chandler's piece every day.
He's going to be here Thursday.
What's funny is I'm actually interviewing him on Thursday for Trader Summit as well. So when I reached out to him, he's like, "Yeah, I'm going to be on Dale." So you guys are going to get him potentially
double team
2 times. Man. Well, he's going to give you post Fed breakdown, and then I'll be hitting him on the Trader Summit venue. But if you guys, you guys should be watching Jim's stuff here. He's really good. This is a friend of Dale's, longtime friend of Dale's. He puts out a video once a week, and it's really, I want to say he was ahead of it. I mean, when he was like, the Fed's gonna, be more aggressive and front load everything, that's when, it was the next week that Goldman started making some pretty hawkish calls. So
he's been really studying the Fed and everything. I mean, he really marries fundamentals very well with technicals.
Yeah,
So-
he does. He really does. Gosh, anything else that before you go on your interview today?
No, I don't see him, Jasper or Jean Boucher. I don't see him here today. I sent him a message on Twitter, and if you're here, Jean, give me a Y in the chat box, please.
So, Stelios, before you, let me ask:
Yeah.
Is any of the snow melted there in Athens? It's a crazy thing. I
It's
mean,
unbelievable.
I've traveled to Greece twice in the summer, obviously, and all I can think of, in the Cycladic Islands is just being on the, in the ocean or the sea, excuse me, and the beautiful weather. I can't even imagine. I saw a picture of the Acropolis in snow.
Yeah, the problem is
Crazy.
we're not prepared for this. So let's say like a big part
Yep.
of Athens doesn't have power, etc. But it's okay. It's melting away. Tomorrow's going to be fine.
I lost
But,
power
yeah.
twice yesterday.
Yeah.
Oh, hey, Steve. Yeah, I mean,
Hey.
Steve's without power, but you also got to build a snowman with your son, and that's pretty
That
impressive.
that is very true.
Right.
Yeah.
That's awesome. Well, hopefully the snow melts for you guys a little bit, or maybe you might want to stick around for a couple extra days. Who knows?
It's okay. It's okay.
Just a quick one to throw in.
Yeah.
Fully fed services is just out, and it's a bit sucky. It's down to minus 16.2 from 27.3 in December.
Wow.
Its employment's down to 5.7 from 13.6. Could be a little bit of seasonal stuff. Could be a bit of virus stuff. Obviously that impacts the hospitality services sector a lot. But that's a sucky index coming in. Coming in for January.
Yeah, PMI is disappointed yesterday as well. And which one was it? Another one of the Fed indices, which was negative.
It's fodder for the guys saying that the Fed's making a policy mistake.
Yeah, I mean, well, that's true. And do you think that do you think the Fed's paying attention to this data at this stage in the game?
No.
I mean, I know there's still a couple months before lift off here.
I'm personally very sensitive when we say things like the Fed is doing a policy mistake, because it's like ignoring all the policy mistakes they've made for the past 30 years.
I didn't put another in front of it.
Yeah, the biggest policy mistake is that we've got to the point that we've built an environment that is totally 100% dependent on
Fed.
monetary policy that was supposed to be made as a temporary measure to fight a very specific point in time and the crisis we had, right? And now this has become the rule. So if we want to talk about policy mistakes, the biggest policy mistake is that we've created economies and a financial environment that is completely dependent on that. So
but we can't look backwards, Steve. We got to look forward. It's the market you're dealt. It's the market that we're dealt
but
with
I mean,
right now.
if
so
we
what
want to talk
what are you gonna do about it? I mean, the
solution eventually is going to be for these policies to be reverted back to normal. Is it going to be extremely painful? Yes, it is going to be extremely painful. But at some point, we have to go through that pain, and it will happen. And the more they postpone it happening, the bigger the crisis is going to be when they can't avoid anymore. And perhaps,
right, but how do I make money with that today? I get what you're saying. I get what you're saying.
Yeah,
So
but my comment was based on a comment that this is a Fed policy mistake. So that is a fundamental thesis.
Got it. Okay, so
I think we still sell rallies on equities, and I said this morning. I said it yesterday, and it's. I think we've changed. The markets have changed now. For now,
behaviorally, yes.
Until the Fed kind of does a U-turn, I think we sell the rallies now.
So, if we get a move to 4,400 or 4,480, 4,500, maybe even up to 4,550, you know, in the coming days, you got to take that as a gift. I would still give Stelios's left thumb to be a seller up here.
He's only,
just like 2 weeks ago when I said if we got up to 47.50, I'd give Stelios's left
ding-a-ling.
Ding-a-ling. to sell it up there, and we hit it and reverse. If we got to move back up towards 4,500, 4,550, I would be a seller up there, and I
will
would
be as well.
You might get it, bro.
What?
You might get it.
Yeah, I mean, and then I might have to
I know
go over
someone
to
who said
Stelios's
that
left
was
toe.
the end of 3 was yesterday, which means a 4 is coming, right? So, a 4 could take it up there and then flush again.
Wait, after 4 comes 5, right?
Yeah, but this was the end of 3, right? Yeah, this is the end of 3. We'll get a 4. This is 4.
Then we get
And then
5.
we get
then we
another
get
flush.
6.
Yeah.
Then we get 7. I learned that in elementary school. I know exactly what you're talking about.
Anyway,
There you
You
go.
don't fool me. What?
Elliott wave.
Oh. Dang, I thought we were just talking numbers. All right. So no, I know exactly what you're talking about. So the thing is do you think this is the end? This is that was wave 3 completion. Then?
Yeah.
You really, you believe that? Okay.
Yeah.
So
well, I don't, that's not me. I'm not an Elliotician. All I know are 3 drives.
Got it. All right. Well,
okay.
Hey, by the way, did your guest come?
I don't know. I can't find him, Blake.
Oh, okay. Well,
tell me the name, Dale. Let me have a look.
Jean Bouchard, or Jasper Forex is the name of his little company, and I sent him a Twitter message, and normally that's where people respond to me. Let's see. Nope, still nothing.
So yesterday, just I'm gonna, since we got a couple more minutes, and then I'm gonna go, since I want, obviously one of the things that as a ForexAnalytix subscriber, if you are one of the benefits of that is I'll go through all of the instruments along with Steve and Stelios, and here in the next let's see, we start in approximately 35 minutes from now, or 37 minutes from now, excuse me.
Yep.
Is when we start the morning edge. One of the things that I, love to do, and, one of the things that we do is we go through the entire, we go through all the markets, all the major, currency markets, gold, silver, Bitcoin. And then then after that, Steve ends up covering, and Stelios will end up covering a lot of other assets, and nat gas, and things that people are looking at, and address people's questions, and Q&A type of thing every single day. One of the things that I said yesterday, and I'm going to leave you guys with this going into the FOMC tomorrow, is I expected us to be in a range ahead of the Fed. Before there's a big event, whether it's a jobs report, whether it's a Fed, whether it's, interest rate decisions for, different, whatever country you're dealing with, I usually try to find the range and figure out where the mid range is going to be. Yesterday, I was thinking, because we hadn't spiked down to to this low. I didn't think we would make it all the way down there. You can see, I looked at the S&P key support. That's why I put an asterisk of 4250. We got to 4225. So we overshot where I thought we were going to go yesterday. And yesterday I said, this is the range, and, we're going to end up being about mid-range going into the Fed tomorrow. Well, we stretched a little further, but I still feel that this is the range. So I think that tomorrow, ahead of the FOMC, we will be somewhere in this neighborhood, just waiting for the Fed. So the reason why I say that is, if you guys take that into consideration, knowing that the market will find itself mid-range, because the market doesn't want to be overexposed bullish, overexposed bearish. It's going to find that neutral ground. Try not chasing the market today. We get towards 4,400 in the S&P. Be careful trying to chase it higher. We get down towards 4,300 in the S&P. To the downside, maybe 4,320. Don't try chasing it too far to the downside either, because I think we're going to find ourselves neutral ahead of the Fed, because post tomorrow the market's going to figure out if Powell and company were way more.
It looks like a good form if we get a rally for a few weeks. Right shoulder there, Blake, with the neckline at yesterday's low.
Yeah, it's entirely possible.
That,
I mean, we could do something like this, and
that would measure big. to the downside? It'd be
Man, that would be-
36, I think.
Yeah. Well, actually, let's let the imagination run amok a little bit, Dale.
All right. A little
Since,
S&P porn.
Since you seem to be a little creative this morning, so let's just imagine you see something that looks like that.
Yeah.
Yeah, I mean, that would take us realistically, to something like that happen over the course of the next month or two.
Yeah.
Takes 3,600 maybe. Yeah.
Yeah.
And then, no one will, we'll never reach that target because let's face it, we're in a pretty bullish market. So, we'd probably stop shy around 3,800 or something. Who knows? But yeah, you never know. I mean, I never know.
Yeah.
So
just another 10% or so.
Yeah. Well, I want to say everybody, good luck today. And Dale, it looks like your interview is not here. Good luck, everybody.
Yeah.
And if you're in the ForexAnalytix community, I'll see you guys on the morning edge in just over 30 minutes.
And if you're not, I have to ask you why. And you know what? You should ask yourself that too. You're here for F.A.C.E. You're trying to get good at this. How do you get good at anything without investing your time and money into it? And to learn and be part of a community. And at these discounted prices, I just have to ask you, why? Why not invest in yourself? I mean, Blake showed it's the best site on the net. So that's my subjective opinion.
Well,
and objective.
Thank you. And thanks for mentioning that, Dale. And I want to mention one last thing before we let you guys go. We have a very, very big announcement coming this next month. There is going to follow us on Twitter, or if you get emails from us from, the ForexAnalytix community, we're about ready to show you how you can supersize your trading. So it's going to be some pretty exciting stuff coming up.
I thought you were going to talk about my pregnancy, but that's good. I'm pregnant.
Oh, congratulations, David.
Thank you. Thank you, Uncle Steve.
That's those COVID meds. See what happens? You get those COVID meds.
Was it the COVID vaccine?
Great to be, you don't know what you miss until you're without it. And just being without F.A.C.E. and my team for 4 days, I really miss the heck out of doing this and being with the guys every morning. And I'm sure you guys feel the same when you miss it. So great to be back. Thank you for your support, Steve, and getting me back online. And Blake,
my
your
pleasure.
understanding, and team, great to be back with you. Remember, everyone, don't just count your pips, count your blessings, and ask yourself why you haven't become part of our community after all this time on F.A.C.E. Adios, everyone. Thanks, team.
Cheers, guys.
Dale, thanks.
Bye.